Now, what is current asset? Current assets are those assets which can be converted into cash within the year. एक साल के अंदर वो कैश में कन्वर्ट होगा. That's called current asset. So, what are the example of current asset? Stock, cash, bank, debtors, bills receivable, marketable securities, prepaid expenses. These all are our current assets. So, current assets and current liabilities. This is called the change of current assets and change of current liabilities. It's called working capital. Working capital means current assets minus current liabilities. So what is working capital? Working capital means that capital which is necessary to run day-to-day business. For everyday business, we need working capital. So working capital. So see, in our operating activities, when we write operating profit before charging working capital. So this profit before charging, and this part we will write our working capital part. So what is working capital? Current assets and current liabilities. So see, debtors is our current assets. So 96 and 83, what is the change? 96 to 83 is decreased, है ना? Your previous year 96, current year 83. Your current asset decreases. I told you when your assets value decreases, it's called cash inflow, है ना? So in our working capital, this part we write decrease in debtors. Decrease in debtors. Now, what is the change? 96 to 83, 83 and 10. It is means 93 plus 3, 13,000. So 13,000 is our inflow. That's why positive balance, not within bracket. Clear? Acha. See next, discount on issue of shares. Discount on issue of shares. This one is a non-cash item. I told you depreciation, preliminary expenses, goodwill written off, loss on any kind of machinery, or discount on issue of shares. These all are the non-cash item. And non-cash item we adjust with the our net profit before tax and extraordinary item. Okay. So this is our adjustment for. So what we write? Discount on issue of shares. This is your asset size. So your asset 3,000 to 2,000. 3,000 to 2,000. It means asset decreases. है ना? 3,000 earlier, 2,000 at present. So your asset balance decreases. So when asset decreases means inflow. So you write. What you write? Discount on issue of shares. So change is 1,000. So 1,000 is our positive balance. है ना? 1,000 say 3,000 to 2,000. So 1,000 change, and this is live asset side. Asset decreases means your inflow. That's why positive balance. Clear? Acha. Next. So asset side done. Once again, I just repeat: machinery, investment activities. Debtors in our operating activities, working capital. Discount on issue of shares, non-cash item, operating item. So asset side done, come to our liability side. In our liability side, first is share capital. Share capital means what? Share capital means companies, equity shares, preference shares. Okay? Equity company raise the fund. So I told you share capital comes to which activity? Operating, investing or financing? Yes, financing activities. So share capital come to our financing activities. Now see the change. 1,80,000 to 2 lakhs. 1,80,000 earlier, 2 lakh is the current year. So you tell me, we will write 1,80,000? No. We will write 2 lakhs? No. We write the change. What change? 20,000 increases. And what is the principle? This is the principle, golden rule. Up here, Ratna. If your liabilities increases, it is called cash inflow, opposite of asset. If your liabilities decreases, cash outflow. So here liabilities increases 20,000. 1,80,000 to 2 lakh. So 20,000 increases. It means inflow. So what is issue of equity or share capital, issue of share capital, equity share, whatever the preference share capital, because my share capital increases. So 20,000 is my increasing value. Okay, next. So share capital and depreciation reserve. Depreciation reserve is what item? Depreciation reserve 60 to 62 in my liability side. This one non-cash item. Depreciation reserve means you can keep reserve for your asset depreciation. And what is depreciation? Depreciation means the loss, one kind of loss. When we use the asset, building, machinery, furniture, the value depreciates due to many reasons over there. That's why value decreases. So we keep reserve for depreciation. It is a non-cash item. There is no cash item. Remember, for cash flow statement, the cash, only the cash item we record here. But a non-cash item we adjust with our net profit because it is an indirect method, not direct method. If it is a direct method, no need to write any depreciation. But whenever you follow the indirect method of cash and cash equivalent, that time you write all the non-cash item or you adjust non-cash item with your net profit. So in my liability side, 60 to 62, 60,000. So 2,000 change, 2,000 increases, and you know increases means inflow. So write down depreciation reserve 2,000. So it is my inflow. Inflow means plus balance. So this one done. Now the net profit 45 to 72. What is the change? 27,000. 45 to 72 is also your surplus increases. So inflow. So net profit before tax and extraordinary item 27,000. The change is 45 to 72 means 27,000 increases net profit. Okay. After that, debentures. What is debenture? Debenture is kind of loan. Company issue debenture to the debenture holder and debenture holder pay the amount to the company. So it is type of loan. So when they issue it, company inflow, cash increases. If company pay the redemption amount or pay interest amount, so it is company's outflow. So in this case, debenture 60 to 54. Can you tell me what is the change? 6,000 change, 60,000 earlier, current year 54,000. So 6,000 change. Now 6,000 increases or decreases? Earlier 60, present 54. It means your liability side. This is your liability side, and your 6,000 decreases, and we know decreases means outflow. Why decreases? It means you pay the interest, maybe redemption of debenture. That's why decreases. Up pay the rate. When you issue, your increases. If you pay it, it is reduces. So maybe you pay redemption. So write in our financing activities, redemption of debenture. How much? 6,000. Okay. So see, this is our balance sheet. From this part, share capital come to financing activity, debenture reserve, non-cash item, operating activities. Profit and loss is the net profit before tax and extraordinary item, operating activity. Debenture is the financing activities, and on the basis of this principle, asset increases means outflow, asset decreases means inflow, opposite liability. If your liability increases, cash inflow. If your liability decreases, cash outflow. On the basis of this principle, we analyze the balance sheet, and that balance sheet we record here. First we start from this part, and the 4,000 is the change. Okay, let's see. 4,000 change due to these three activities. Is it true or not? Let's check. So 27 plus 1 plus 2, it means 30,000. Okay, 30,000. Acha, is there anything left? Creditors, anything? Stock in our balance sheets. Stock or creditors? Question paper. Yes, we means the stock and creditors side. Creditors here include creditors. Creditors balance 35, 32. 35,000, 32,000, and here you include the stock balance. Stock, your 60, 40, 60,000, 40,000. We missed these two items, 60 and 40. So this our stock done. So see, stock, your asset side, 60,000 to 40,000. Stock decreases. Tell me, if your asset, stop your asset decreases with inflow plus. So what we write? Decrease in stock. How much? 20,000. Because 40 to your 60 to 40, it means 20,000 inflow. Because stock decreases. So asset decreases means inflow. Then what left? Your creditors. Creditors, see, 35 to 32. It means 3,000 decreases. है ना? 3,000. What is the change? 35,000 24 year. 32 is the current year. So 3,000 decreases. So decreases means outflow. So decrease. Debtors decrease. Stock also decrease. Creditors also decrease. So all are decreased. So decrease in creditors. How much? 3,000. So 3,000 minus. Okay, done. We analyze the balance sheet. Now, just we balancing करना है. So 30. This one is how much? 43, 63 minus 3. Minus 3. The 60,000. 60,000. Check it. 60,000. 27 plus 1 plus 2. 30,000. Plus 13,000. 43 plus 20. 63 minus 3. 60 minus 3. 60,000. This one is called cash flow from operating activity. This one is called cash flow from operating activity. Achha. In our investing activities, only one item, machinery. There is no other item from our balance sheet. So 70,000 minus, है ना? So 70,000 transfer to my final amount column. This is my adjustment amount column. This is my final amount column. So there is no other item. So it is transferred to our final amount column. So 70,000. What do you write? Cash used. There is no generation, no flow because you purchased the asset. So cash used for investing activity. So 70,000. Okay. Come to our financing activity. 20,000 plus minus 6,000. So what is the change? 14,000 plus net increase, है ना? So you write net cash flow from financing activity. Net cash flow from financing activity. Okay. Now see the magic. Our net increase of cash and cash equivalent was 4,000. है ना? We are going to prove this amount 4,000. How? Operating activities 60. Okay. Fine. Investing activities minus 70. It means minus 10. है ना? 60 minus 70. It means minus 10 plus 14. So minus plus 14 minus 10. It means plus 4,000. है ना? See 4,000. We proved. So this is the beauty of accounts. We recorded the closing balance of cash. We recorded opening balance of cash. Then I just summarize. The net increase is 4,000. Then we analyze the balance sheet. And we are going to prove this 4,000. So it is divided operating, investing and financing. Everything we analyzed, and at the end we can see from operating activities 60,000. From investing activities minus 70,000, it means 60 minus 70 minus 10 and financing plus 14 minus 10 plus 4,000. See the flow plus 4,000. Okay. So this is our one problem. The first problem we have completed regarding the cash flow statement. I hope it will help you. If any question, you can ask in our comment section. Thank you very much.